Hello YouTubers, and welcome back to the Trading 212 portfolio. Sorry I haven't posted for a while, but I've been a little bit flat out with various other things, as you would have seen on the various other videos that I've uploaded. If you do like this video, please don't forget to smash the like button and subscribe. I'm hoping to make some changes to the way that I do this in 2022, subject to time constraints. But we'll come to those as and when they materialise. So, leaping straight on into the portfolio. So as you can see, I've actually reduced the portfolio a little bit, probably since the last upload, just to these kind of key shares here. As I mentioned before, I have done away with the dividend pie, and I've gone for an ARK investment pie now, which give a separate update too, but that's given a reasonably good return of 4.16%. Did actually reach highs of about 10% return, but in the last few days it's been a little bit of a sell-off. The overall portfolio is up 21.29%, so doing really healthy now. We did actually reach highs of about 29% in the last week or so. I don't know why it won't load this particular graph here at the moment. We're trading 212, but just have to take my word for it. We got up to about 29%, but yeah, pretty healthy return nonetheless. Obviously, it's just over £5,000, nearly 5.5. So the key holdings at the moment, American Express has done pretty well for me. To be honest, that's quite a sort of boring, more established company, if you like. It doesn't tend to fluctuate too much, get a small dividend out of it. It's not a particular growth. But as I've always said, it is a company which I use myself. So I have an American Express card. You get a 1% cash back from it. I think those sort of things are really brilliant. As long as you're particularly strict with your credit card, that you pay it off, you can build your credit score with it, spend money on it, pay it off in full every month, get your 1% back. I personally can't really see the point of using your debit card if you're going to get 1% of everything that you spend back when you use your Amex card, as long as you pay the bill off in full. If you don't, then obviously it's like crazy interest, which is not very frugal of you or sensible. In fact, you're working against your 20% return here, or 21.26%. If you're paying 29% APR elsewhere, you might as well use that money to pay off that debt, because effectively that is an investment in its own right. So anyway, got American Express. To some degree, Apple is not dissimilar, although obviously it's still innovating and a tech company, but it doesn't tend to have the crazy fluctuations of startups. Obviously, it's a well-established company, and again, you get a small dividend from that. Moving on from that, so we have a slight exposure to the kind of banking, currency, crypto type market, I suppose. With Coinbase here, it's done incredibly well for me. I bought quite a fair amount of it when it was right down at its IPO price, and that's given me around about 30% return. It did actually get up, 45% return, did actually get up to about 60% return, but as I say, there's been a bit of a sell-off. Lucid, which was obviously formerly CCIV, that has been on an absolute mental run of late, and it's pretty much doubled in price for me. You can see here we're on about 99.08. I mean, it's been as high as 114% return. So that is just crazy. And the irony of it is most of the money in the portfolio is in the S&P 500. It actually overtook the S&P 500 in my portfolio for a moment in time. So quite interesting with that. PayPal, I think they've had a bit of a hard time lately. They've had various issues. Obviously, they missed profit forecasts and all that kind of stuff. So at the moment it's on a bit of a dip, so I've been sort of buying a few of the shares, increasing my position. So you can see on average I'm holding say £1,000 to £1,500 in these individual stocks, bar the odd one. With PayPal obviously we're up to £2,000, still at a minus 10%, but I think it's a good buying opportunity. As I said at the beginning with the Amex, I think PayPal is a brilliant company. It's something that I use quite often. It's really helpful when you're checking out. You've got all your cards listed in there. You've got your delivery addresses, everything, the whole lot. You don't have to fill any of that in. I mean, that was some of the reason I found the internet a little clunky back in the day, where every single person that you tried to, or every company that you tried to purchase from, you would have to fill in all your blooming details every single time and your postcode and do a search, and they all had different fields. So personally, I like things like Apple Pay and PayPal, where it's all pre-filled in for you. Robinhood, obviously, we're bouncing around about a 5% loss. I've just been sort of buying the odd stock into that at the moment. I'm not too fast. I think long term it's a good hold. I do like apps like Trading 212, Freetrade, and Robinhood. Obviously, it's an American app. They get people into investing, and they're very easy to use and understand. Obviously, they've had their kind of bad press and things like that. And as I always say, you should only invest money that you are looking for long term. The channel itself is not financial advice, so you should really do your own research and things before investing money. You can't come to me. I'm literally just a guy on YouTube, so that I'm not saying copy me or anything at all, and you'll do just as well or 20%. Everybody has got their own risk appetite, and you need to figure that out yourself. So with Robinhood, I think that it's as good a app as say Freetrade or Trading 212. It's just they've obviously got you can buy shares in them. If you do want to start your investing journey, though, please do use the link in the description below, where you can actually get a free share with Freetrade if you sign up with them and credit some money. I think it's between £3 and £200. On average, I think the shares are sort of only £4 or £5. Some of them are tenner, that sort of thing. But it is money for nothing. So you can start your investing journey. You stick £50 in there, and you get a £5 share. You've already made 10% back, essentially, even if your share doesn't, your share that you buy, or you don't invest the money straight away. You're waiting for a dip. So anyway, moving on, Square, that's another sort of payment processing thing, and I do think personally I've got quite a good exposure to the payment digital asset, cash, crypto, coin market, whatever, digital payments via Coinbase, PayPal and Square. So they're pretty okay at the moment. They were obviously all battering around. Coinbase has done very well. PayPal's down. Square's pretty much flat for me personally. And then Tesla just got the kind of just under 1.5 shares in there. Obviously that's done pretty well since I purchased it. I'm not really looking to buy any more at that cost. Not that I can buy any more, which I'll come on to in a bit. And then obviously a fair chunk in the S&P 500. Just quickly back to I can't buy any more. That is because I have already maxed out my ISA. I know we're only just over halfway through the year, so some people will say, what if there's a dip buying opportunity, but we should have some cash and kind of crack on with it slowly. Well, the thing is I can invest money into a non-ISA account if I choose to. And the thing is with doing that, I know you will pay tax on it, but as quite a few other YouTubers have pointed out, you get £12,500 or around that anyway, tax-free in the UK for capital gains anyway. So I'd have to make a £12,500 odd pound profit and then sell it and realise that gain. So even if I kept money in there and I made a £50,000 profit, for example, as long as I don't draw out any more than 12,500 in any 1 year, then actually it's rather irrelevant in terms of a tax position. So things like trading or free trade, where you pay £3 a month for your ISA. Well, if you're investing quite a small amount of money and you're only going to keep it in there for, say, sort of 3 or 4 years, then you might want to consider the fact that the £3 is actually eating into your profit. You can see here, I've got a fair chunk invested, and it's given me a £5,400 turn. So let's say that grows to 7,000 by the end of the financial year in the UK in April. I'm still below that threshold anyway. So, you know, I'm not overly fussed I've maxed out the ISA. It was my goal to do that, and now I'm free to invest other money elsewhere. So yeah, I hope you enjoy the video, and it's a nice, reasonably in-depth update for you. If you do like the video, please don't forget to subscribe, hit the like button and so on. Comment below, see how well your portfolio is doing, and yeah, I shall see you next time, or maybe I'll see you, who knows, I might do another screen share thing, depends on time constraints. Have a nice weekend.